price of Bitcoin managing to stay above $19,000 in a critical week coming up here for the crypto markets. You've got the 4th of July extended weekend. Stock markets are closed. But in this video, we're going to cover off how low Bitcoin can go. What are those price floors? And potentially, how much lower can this go? Because we know shorters are really loading the market right now. And I've got a warning for all of those who are shorting the market right now. Let's get straight into the charts. And as always, guys, if you're looking to buy any crypto, whether it's on spot, whether you're trading, you can do so using the links in the description to BYBIT and BitGet, who have kindly given the best bonuses for this community. So check out those links in the description. Now, as you can see here on Bitcoin, we've got an hourly nice green candle here. Bitcoin up 0.85 on the day. And as you can see, we've managed to create a little bit of a higher high, right? If I move this line out of the way, which was our price target to the downside for our Adam and Eve, you can see we wicked as low as here, 18,600, and now we're slightly creating a little bit higher highs, which is good. So we're trying to uptrend our way back towards 20,000, but we're going to look at a bunch of on-chain metrics as well to try to corroborate where is this bottom. We can see fear and greed index is at 14, notched up a little bit. The market's feeling a little bit more confident that it didn't just dump right under 19. But should we be getting excited now that we can start bouncing back, or do we need to hold that level of cautiousness? First and foremost, we've got a few things to take a quick look at in the market. And what you can see is that Argentina has had a whole bunch of issues. Their economic minister resigned and everybody flocked to stablecoins over the weekend. So huge crisis. And another reminder for us of why crypto is so important from the fundamental perspective. Sometimes when we get caught up looking at the charts day in, day out, bear market this, bear market that, can get very difficult for us, particularly in the Western countries where we have let's say, well, not now, but we would have more stable currencies. It's easy for us to forget the mission of crypto. And when you read headlines like this, then you remember why countries like El Salvador decide to make Bitcoin legal tender. So have a quick read of this article when you guys get a chance. You've also got another lending platform, Vauld, now looks to restructure, right? So we had the news yesterday, which we covered off, that 150 Celsius employees were laid off. And now another lending platform is suffering $98 million in withdrawals since June the 12th. So everybody is now flocking out of centralized finance. And again, a quick warning for any of you guys, if you have significant funds in centralized finance, you need to figure out a way of getting it out now. It is not worth the yield you're trying to chase when you've got this high-speed train coming towards you. Centralized finance is failing now due to unethical practices, due to misallocation, due to rehypothecation. We've been warning about this for a very, very long time. Now, another slightly more bullish story to show here is we're looking at the mean hash rate. Now, what I want to show you is the mean hash rate today is 1,000 times greater than what it was the last time we were at 20,000, which was in the bull run, which ended in December 2017. Okay, so you look at the mean hash rate. We're at the same price point. The white line is the same price point, but the mean hash rate is 1,000 times higher. In other words, Bitcoin network has 1,000 times the security that it did the last time we were at $20,000. You are not buying the same asset. The security of the Bitcoin network is the asset you're paying for. It's unreplicatable. Nobody, if you had $1 billion today, if I gave it to you, you could not go and reproduce the Bitcoin network of miners and the hash rate. Okay, you just could not do it. So that is the asset you're buying into, and it's clear when you look at these fundamental metrics, it's not the same project it was the last time we were at 20,000. So always important to give ourselves a little bit of perspective. And then I wanted to come back to this chart, and this is a chart I shared with you probably about a week ago. Shout out to Glassnode for producing these charts. They do produce some nice on-chain metrics. And what I wanted to show you, and I will move my picture-in-picture out of the way, but I want to start here by looking at the 2015 bear. There are 4 different indicators I want to share with you. Now, each of these lines represents a different Bitcoin floor price model, a different way of giving you an idea of have we reached floor. Now, the first one is the 0.6 Maya multiple, okay? So that is your top line, the red line, okay? So the red line is the 0.6 Maya multiple. Now, all that means is it's the difference between the price and the 200-day moving average. So the 0.6 line means you are 40% away from your 200-day moving average. Okay, that price floor currently sits at around 23,000, so we're below it. You then have your realized price. your realized price is the aggregated cost basis. We look at this quite often. The aggregated cost basis of everybody who has bought Bitcoin, the realized price, okay? So when you've actually sold it at a loss. Now, the realized price currently sits at 22,000, okay? 22,500, sorry. We're below that. Then you have the blue line, which is your 200-week moving average, another important price floor, okay? That is sitting at 22,390. We're below that as well. Then the next floor is your green floor, which is your balance price. Okay, the balance price accounts for the destruction of coin days and reflects a market price that matches the value paid for the coins. That price is currently sitting at just shy of $18,000. So we've not breached that yet. Okay, $18,000. We did breach it when we went to 17,600, but we're not below it right now. And then you have the last model, which is the purple model, which is your delta price. And this is the lowest one. The delta price is the difference between the realized price and the all-time average price. Okay, so if you take the all-time average price, minus that from the realized price, you have the difference, which is currently at 15,750, guys. 15,750. That is that purple line here, just above my head, that purple line here, okay? So what I'm trying to say by showing this to you guys, and what this chart is trying to demonstrate, is in previous markets, that's fine there. In the previous markets, you can see here, we went below these lines, okay? And the ultimate support came in from the bottom two, okay? So that came in from the delta. Now, what you can see here is we're not quite at our delta price yet. That's at 15,750. So this is backing up the story that we could have one more flush down lower than 17,600 before then getting that full capitulation, maybe at 16,000, maybe at the exact delta price, which is 15,750, before we're ready for a recovery. Okay, so that's very, very interesting for us to keep an eye on. The other metric I've shared with you quite often is the reserve risk. Do not forget the reserve risk is now at crazy low prices. And this is showing us that hodling relative to price is strong right now. So there's more incentive in this green box for you to hodl than there is to sell. Okay, and that's at extreme lows now. And the previous time we saw these extreme lows were in COVID. We're actually lower than the COVID figure here in March 2020, and then the end of the 2015 bear market. Okay, now the interesting thing is when you're looking at the end of the 2015 bear market, you want to see how long you were suppressed for. You were suppressed for a long time here. So again, don't expect this just to be a flash and then bounce straight back up. Once you found your floor, we expect to be there for a while. That's what the historical bear markets have shown us. The only time we've just bounced back sharply was the COVID one because of the unprecedented amount of printing. So important we understand the differences there. Then I want to share this with you guys. And what this is showing is the net unrealized profit and loss. But you can see the color coding. So, and we've just wicked into the red now, which shows we're in full capitulation mode, as again, previously characterized by the COVID period, before that, your end of 2015 period, and your 2019, 2018 bear market as well. Okay, so we know now we're in full capitulation, but again, you can see we're not quite as low as the previous falls. Now, you could argue that we don't need to capitulate as much because the network is improving. So you can see we capitulated a lot in 2012, a very immature market. Then in the 2015 bear, we capitulated quite a lot as well, but not as far as 2012. Then in 2018, 2019 bear market, didn't fall as much. Then the COVID crash, not as much, you see, and now we've fallen lower. So the argument here is this might not need to go as far low as the previous proper bear market we had. So this could potentially be the floor. So this is another metric for us to look at and stack up. Ultimately, nobody knows where this bottom is. We have to try to corroborate the evidence we have. And I want to show you a few technicals right now as well. But from the on-chain metrics, you can see there are a few arguments to say we can head lower. Okay, that's clear. We can head lower to the delta price at 15,000. You can see the balance price is at 17,900. Can we get to those levels? And we'll see what the technicals say as well. But the reality is we're in this no man's land right now. We're almost hanging in this position where we can either start moving to the upside, or we can fall down and bounce back and then move sideways for a long period of time. So my bias is to the downside right now, but that does not mean I am shorting the market. I don't short the market, and a huge warning for anybody shorting the market with heavy size. it is risky. It is really, really risky out there, and it's just as risky as you guys long in heavy right now. We're in that no man's land. Even though I do expect us to fall to the downside, it wouldn't be that kind of a conviction where I'd be loading this with heavy size, because trust me, the market can just move against you and liquidate you like that. There's nothing stopping this market from having a quick pump up to 24, 25, 26, finishing you off before then coming back down, right? So that's the kind of things I'm trying to prepare for here. Now, let's get straight back into this chart. And you can see here, obviously, the first next level we want to look at is this 17,600. I also want to show you this chart here. You can see here on the 4-hourly chart, you can see we're forming a symmetrical triangle. So you're getting good support here from the bottom of the symmetrical triangle. And don't be surprised if you see a little bit of a run up to the top of the wedge at about 20,000. But then the question is, do we break to the upside and do something like this, which is a retest and run? Or do we fall to the downside? Now, you have to remember, a symmetrical triangle has 2/3 bias of breaking to the downside and continuing the trend from which it started. So most likely, this will break to the downside, which will give you a measured move of, let's take the move. The measured move will take you to 14,800. Okay, so that's what the technical target is showing you from this move to the downside. Remember, our next level of support won't be at 13,900. Now, I'm not calling for this number just yet, 14,900, 15,000, until we actually break this trend. So I need evidence of breaking this trend before I can confirm that price point to the downside. Now, this positive scenario, the positive scenario I have to show you as well is if I click onto the daily chart, and in the same symmetrical triangle, what you can see is if this fails, we could be creating what is known as a W pattern, right? So we could be creating this W pattern where you get this and you bounce here, and then you bounce to the top side. Okay, so that's what you could be creating, is that W pattern here. The yellow doesn't help. Let me get the pen and I'll show you a little bit more clearly here. What I want to show you is there is this bullish situation, which is you could be moving to the top side here. W pattern there you go, and then that would be your reversal pattern. Okay, so that reversal pattern will come with a neckline of 22,000. But again, even if that reversal pattern plays out, do I think that's going to sustain? No, because if you look at this, you're extended from your daily EMA. You could get the W breakout and run towards 24, 25, 26. But even sitting here at 24, 25, 26, and that's a position you guys can long. It's a great trade to take, but you still expect it to come to the downside because you have flipped your EMA bullish. I hope you guys are understanding that, because that takes a lot of nuance. A lot of people who aren't taking the time to listen to what I'm saying in my videos, they're saying you're flipping between bullish and bearish. The long-term trend is very bearish, right? The bears are in control. But if you do get this W pattern breakout, you can have smaller time frame, long positions running you up into your EMA ribbon. These are just relief rallies. They can happen, and they're tradable events. But long-term, I continue to maintain my bearish bias to the downside. That's very, very important, okay? A few other things to remember this week. We've got Wednesday, the FOMC meeting. Minutes will be coming out. They can move the market. Remember, those are the minutes from the previous Fed meeting, so nothing new should be in there. But sometimes you get a few comments from the Fed officials, which spook the markets. Thursday, we're going to get the ADP employment figures, which are the private payroll figures. And then Friday, we get the official non-farm payrolls. We're expecting the labor market to call off a little bit. But again, you've got this double-edged sword of not wanting it to call off too much, but also calling off enough that Jerome Powell doesn't think he needs to keep going hard with the interest rate hikes. Okay, so a lot to look out for this week. We've then got the CPI reading on the 13th of March next week, which we'll cover on this channel as well. And these are the key macro trends we need to see start to improve if we want equity markets to improve and if we want to see Bitcoin start to run to the upside. Because at the moment, there is no evidence that risk is going to turn on, whether it's from a macro perspective, whether it's from a local situation with what's going on in crypto, from Celsius to Voyager to the UST collapse to Babel Finance to Vauld to Genesis to BlockFi. I mean, it is crazy out there right now. This is definitely going to be memorable as the bear market. I don't think we're miles away from capitulation, but it just doesn't feel like we're there just yet. Hope you guys enjoyed this video. As always, don't forget to smash up the like button and subscribe. Check out BYBIT and BitGet, links in the description if you want to buy any crypto. Those are the exchanges I use on a daily basis and would highly recommend you guys use them. Go watch this video, and I'll see you in the next one.